Alright. Um, if you're on Instagram, if you're watching Instagram live feed, just follow the pin. If you want to see the chart analysis, and I'm gonna start the official lesson in a couple minutes, just as soon as I get the stream started. Alright, see you in a minute. Alright, this is the intro. Alright, welcome back. Welcome back. Welcome back to another episode. Right now, we're streaming off YouTube as well um as Instagram. So I want you guys to enjoy um the stream. And in today's episode, let me see if make sure this is up correct. Okay. Sorry guys, I just want to make sure everything's playing correctly. Alright, so today's video we're gonna talk about a couple things. It's kinda all gonna be good news, to be honest. And if you're on the Instagram live or in the streaming on YouTube, the one in the chat so I know you can hear me and everything. Um yeah. So to begin things off with today's stream, um like the video, comment, subscribe, and hit that noti bell. Again guys, we do these videos every week, every Tuesday. I try to make time for it. We're gonna work on different strategies. We're gonna talk about different things, it's news, so on and so forth. Fundamentals, technicals. Try to keep it under like 20 minutes, 15 minutes or so. If you guys have any things you want to share, throw it in the comments in the stream. I'll try to keep an eye on it. And yeah. So, yeah, before we even begin today's stream, I do want to begin by saying this, and that is, this is our mission statement, and just want to go over what we stand by and kind of our motto and what we do every single time is that we try to provide and educate the masses about financial literacy to earn money passively, which will lead to a better quality of life. Now, let's be honest. Who wouldn't want a better quality of life? Who wouldn't want to earn money passively to where you could just not have to even worry about it? You just wake up and boom, from that amount to more than that amount, and you don't have to lift a finger. All you have to do is press a button. So this is our goal. This is our mission, and this is just an education. Whether you want to do it by yourself, have someone do it with you, or you just want to be more knowledgeable, more roundabout person of doing it. That's our mission. Okay. So again, we're gonna have a webinar. I believe May 15th. It's almost done. Again, guys, I'll put the photo. If you guys want to register, please DM me first before you send any payments. We yeah, it's gonna be exciting, to tell you the truth. I'm excited. I've been working really hard on it, as well as me and the team. And to be honest, guys, especially if you're a beginner at this, you're gonna learn a lot. You're gonna learn a lot. And this is only just an hour of, let's say, no, well, it's 30 minutes of education, and it's the next 30 minutes of just answering questions. And if there's not a lot of questions, we could continue the conversation until you guys can learn more. So it's never a bad thing to dive, at least put one foot in the door, see what's up. All right, this little education. And to be honest, guys, we're not even charging that much compared to a lot of people in the industry are charging. But the value of entertainment that we're giving you, it's trust me, this is just the steps. And like I said, we're gonna go over crypto, forex, stocks, and more. So if you guys have any questions with all these financial industries where you can all earn money passively, ask me, ask us, ask the team. So again, it's one-time payment. I mean, as we always say, a lifetime of passive income. If you know how to trade, you could trade till you're old. So, and it's a 1 hour class that will last for ages. And it's all online. So the date is Friday, May 13th. I'm gonna probably do it on the afternoon, like 7 o'clock. When everyone's out of work. The price is $40 USD. That's actually cheaper than their Signal service. All right, or $35 Bitcoin. And again, this is gonna be the wallet address, QR code. So again, if you're gonna send the payments, at least let me know prior who you are, your name, when you're gonna send it, so I can at least make sure that's you and that received it, and I have you marked down to be a part of the webinar. All right, enough about that. So another week, another dollar, as I like to say. So as we always do when we start this video, we talk about the S&P and the U.S. market and how things have, overall done good news for the S&P market itself. And from those dips we've had and the hiking and the gas and so on and so forth, the market has recovered drastically, significantly. And to be honest with you guys, through every single week, just look at these charts and doing these videos with you. I'm gonna do something new, and what I mean by do something new, I'm gonna jump into one of these trades with you guys. Cause again, what did I say? If you jumped into where I told you get in that date where I marked it, yes, you would have had like a little bit of drawdown, which is expected. We teach the psychology, the strategy, right? You take the hit and then it recovers. And guess what, guys? The S&P almost always recover and make newer highs. So the key to the strategy is you have to jump in at the right time. You have to be ready with that money, the capital, that tier 1. After you have that tier 2 ready, you get that strategy, tier 2. And then what, tier 3? You get that risk management going, all right, how am I willing to risk, all right, let me weigh my odds. And then the last strategy, the psychology, which is withstanding the fluctuation of the markets. And guys, this is something you can literally learn within, like, kid you not, 6 months to a year, if not less. Just being practical, because again, if you're new to this, you're gonna go through a lot of emotional things. That's why we have tier 4 is the hardest one to learn, psychology, because again, we have to battle. It's a battle within ourselves. Tier 4 really wraps the whole tier 1, tier 2, tier 3 all together, because that's the confidence you need to withstand within those fluctuations. So again, I just want to emphasize how we've recovered drastically from then. And let's get a percentage measure off that point. Let's see if you're in this position, you're up 7%, which is good. Which is good. So yeah, so the next week, guys, either this week or next week, I'm gonna start loading up some money, putting my books down. I'm not gonna put that much, nor I'm gonna disclose how much I'm gonna put up. And if I do, I'll probably, we'll, like a team, we're gonna all, do work together and, decide how we're gonna adjust or so on and so forth. But nonetheless, I'll be in control of it. I'll be the final decision maker. So I don't know, I might do 20 a week, 10, 50, 100, 200, 300,000. I don't know. We'll see. Like I said, I've been doing this for a very long time, so I'm gonna have all the pillars ready for when that comes. But I'm either gonna do this week, depending on how this plays out, or next week. But I'll tell you what, right now I'm not gonna do anything because of FOMO. I'm not missing out anything. I'm just right now it's kind of overbought. and I'm just gonna wait. So yeah, that's that. I just want to recap one trade, then we'll go over some fundamentals. As far as Euro USD, I think this is a trade that we took last week. Um, no, I think we already talked about that. Was it this? No, that wasn't it. Sorry, I'm not sure. Not sure. I might have not even taken any trades last week. Tell you the truth, I don't know. I don't know. Well, I do know actually. I haven't. But anyways, I do want to go over this one trade that we're currently in, as a team that I sent out, and I'll just give reasons why I sent out. Again, you guys could jump in the coordinates. It is what it is. We already got into it. Right now would be a better position if we did get into it. So, we've seen a double top right here, and a double top right here. So my confirmation is when it broke the neckline, and it's kind of testing it. So it's come multiple times. If it does break the neckline, I still have some cushion room that might, the sellers might come in and really take it down. It might not, it might will, but it's a 1 to 2 risk reward. So again, I'm only risking 1% of my account balance, and that's it. Um, we're not gonna go over whatchamacallit, what's it called? The Chicago and institutional and retail traders, where the position are this week. We're gonna possibly do it next week. But I do want to go with some articles that are very important. So it says on this Yahoo Finance article, Putin will deliver an energy shock worse than 1970s, warns Angie Bailey. This is very pivotal because think about it, guys. During times of war, conflict, and mayhem, what generally happens is that people, families, and the world and economies, they generally resort to the original stores of resources such as oil and metals, right? That's why all these, such as oil, petroleum, it's energy, electricity, they're all gonna be affected. Either most likely are going up, which they have in the past, even the prices of metals. So as we dive into deeper in this article, I'm just gonna go over this 3 sentences or so. Angie Bailey has warned the hit of living standards from surging energy prices in the wake of Russian invasion of Ukraine will be worse than in any year in the 1970s. So think about how long ago that was. Speaking at an event in Brussels, the Bank of England governor said this really is an historic shock to real incomes. The shock of energy prices this year will be larger than every single year in the 1970s. So think about it, guys. Like, if you consider price of inflation back in the 1970s as to how it is now, yeah, it's gonna drastically affect them because we as consumers, we're the bottom line. So we're the ones who are mostly gonna be affected by these price changes. So if price changes are gonna keep going up, we're the one that's gonna have to be paying more at the end of the day. So if it starts going up from the supply chains all the way down to the ones who are delivering it, all the way to the gas stations itself, we're the ones that are gonna be mostly affected by it. Almost always, always, because they gotta make profit, right? It's business. And then the last sentence I do want to go over: Vladimir Putin warm ongoing Goering is resulting sanctions has sparked a huge surge in oil and gas prices, piling further pressure on households at time when inflation is at a 30-year high. 30-year high. I'm not even 30 years old yet, and I'm at the top of inflation. Jeez. Isn't that something to really think about, how inflation has affected almost every single person and every single supply chain in this world? Insane. But let's see. How has the US economy, or how should I say, how has the feds combating this inflation, right? Are the feds really gonna sit back and let all this inflation happen? Most likely they wouldn't. But let's see how they would, essentially attack it, or resolve it. And the best way to resolve it is by, as you can see here, rising interest rates may be a good thing for home pricing, right? So I'm just gonna go over a couple points in this one. Not too much, obviously. So this one says low rates make housing less affordable in the long run, and rates may have been on long downward trend, wrote Jonathan Mill, CEO of Milford Samuel Incorporated, a real estate appraisal and consulting firm, in the recent blog post. So basically, think of it like this, guys. As due to the corona war, so on and so forth, interest rates have reached a very low point, right? So as rates dropped low, housing became more affordable. There's so much supply of housing, and as the supply goes down as it is now, they're gonna increase the rates. So though, like I said before, the gas pricing, we're gonna once the bottom line gonna have to pay the most for all these interest rates, and is that gonna be a fair thought? No, but guess what, guys? Because of the stimulus and all that money that's pushed into the economy, we need a way to all that money that got pushed in the economy. It caused all pricing of goods of sales to go up because, again, if there's so much more money out in the economy, as a business owner, entrepreneur, I'm gonna increase my price to take advantage of those money and pull the PPP loans, all this programs that cause all this influx of money into the economy. So lo and be told, if pricing goods and sales have to go up, and inflation will go up behind it, and that's what inflation is: the pricing of goods and sales and services going up. So everything has a collateral effect. So what is the Fed's gonna do about this? They're gonna increase the rates. That's the simple fact of the matter. They have to think, hey, make things more expensive. So here's the big caveat to this, guys. Think about it. If you're a person who purchased a home during the midst of COVID, guess what? Your equity on that property has gone significantly. If you're trying to buy a house now, you're gonna probably find it very difficult if you're not a very well financial position, and that's just is how it is. That's just is how it is. There's nothing you could do about it. That's the way how the government's gonna subside all this inflation that's going on. So to carry on, the notion of counterintuitive but worth exploring because it's a valid one. It's no secret that low rates have fueled the overheated housing market. What I just said, low rates coupled with depressed inventory levels have been driving up prices. The value of housing, the value of your property is going to keep going up. The reason why, because the supply is low. So people are going to increase the price. If the demand is high, people are going to keep raising the prices just to make more money. And the supply law of supply and demand, house prices have been increasing every year for a decade now, and the median sales is up by 15% in 2021 from a year ago, according to the National Association of Retailers. Meanwhile, rates have hovered around historical lows. The rates on the 30-year fix hit an all-time low 2.83 in October 20. That was in the midst of COVID, guys. Like what I just said, if you bought a house in COVID, you got into a good rate, a good price where housing's. Now in 2020, think about it now. If you want to get a house, the feds are rating the hikes up, so you have to buy one soon, very soon. Um, with the rates at a historic low, you create this demand level that is unsustainable. Said Miller. So buyers are quickly absorbing inventory to the point where it collapsed. So again, people are buying houses, people are moving left and right, this, that, and the third. And what else they're gonna do? People are gonna accept it. Rates are low. It's stimulate. See, the thing is, the government is very smart, and I'm gonna end this soon. But I do want to talk about this crypto as well. Maybe I don't know. We'll probably just end it right here. But the thing is, I do want to understand the government knows what it's doing. So when they come out with these programs, and then people are rushing to get all this money, and then people are like, oh, inflation going up, blah blah blah. People are so mad. I mean, let's be honest, supply and demand. If there's so much supply of money, things have to go up with the money as well. And then to subside that, for those who don't have or able to take advantage of those loans, those stimulus programs, the government has to subside that and make it more an even playing field by increasing the rates, making things more expensive, thus then decreasing the inflation. So as they increase the rates, by the collateral effect of that, the prices of sales and goods should and will go down in the long term. Now, is it a short term effect? Maybe not because of the war, and this literally just happened. But hey, we don't know. But anyways, I do want to end this stream very briefly and just say just take a tip, guys. The best way to really take advantage of these economic changes, the best way to really profit from these opportunities, and best way to really protect your funds is really to educate yourself on these different aspects. How does one affect another? Why did this do that? And then you can really make more confident decisions. You can really wake up and not be so drastically effective emotionally and do, not such smart things during times of distress. You know what I'm saying? So it's either you're gonna be too fearful or too greedy. You don't want to be too greedy now. You don't want to be too fearful to not make a move. You have to find that right balance. So the best scenario is someone who literally waited for this to happen. The best time to prices, well, not for even price, because rates kind of follow pricing. So the best person who did was had their money loaded up, waited for the economy to crash, wait till rates were low, money was being pushed out, collected that money, bought a house at a very low price, held that, and held it till now, and they could see the changes of what happened. Those are the real players of the market. Now, on the other hand, those who sell it at the bottom and then buy it at the top, those who have lost money. But hey, like I always say, love is it's fair when it comes to love and war. So and this is the game we play. But anyways, I'm gonna end the video here. Make sure you like, comment, subscribe the video, support the channel. And again, guys, the webinar, be a part of it, DM us. And if you're interested in other programs and services that we offer, you know where to reach us. But I'll see you guys in the next